Well, we're back with you on the Market Day Report on a Monday. I'm Marlin, Bohling with you. Thank you so much for joining us today as we keep track of your ag commodity markets for you. We'll focus first on the grain trade. And, of course, the trading is done in Chicago for the most part, so let's go there right now, where we have Tim Evans standing by. He's at the edge of the trading floor there in Chicago. He's with Longleaf Trading, and there he is. Tim, thanks for joining us here today. I appreciate that very much. So what's going on the trading floor today to cause that little bit of a bounce that we saw in the last half hour?
Hey, nice to be with you today, Marlin. Yeah, I mean, a bit of a herky-jerky move here to start the week. You know, I mean, I think really kind of the market action that we're seeing is action that I'm expecting to see, you know, throughout early and midweek. I mean, and that's going to be pretty choppy trade. You know, I think basically at the end of the day, I mean, you can pretty much make a pretty bullish argument and a bearish argument on most of the grain markets right now. And that typically is going to create the kind of trading activity that we've seen up to this point in today's session.
Okay, now we have had a little strength in the dollar. We can check the U.S. dollar index values right now and see what the very latest is. We had rallied early on in the day, then we kind of sold off a little bit. Now we're firming up again for a second time. March U.S. dollar index futures quoted at 101 even right now. That would be up about 210 points on the day. On the other hand, the crude oil market has been really struggling today, and now we have March West Texas crude down $1.05 at 52.81 per barrel. That's only 4 cents from our low of the day there, well off of our earlier high by about $1.15 basically. Now let's take a look at what's going on here in the grain trade. Let's look first at the corn. We had export inspections that came out delayed, about an hour late this morning, but it seems like we had corn at 1.26 million tons, and that seemed to really boost up the corn market a little bit. It's a penny higher now at 375.5 per bushel. That's just one tick off our high of the day. July now one higher, and December a half higher at 399 3/4. It seems like it's just knocking on the door. $4 can't quite bust through it. Soybean trade, here you have the March contract now trading a penny higher at 1060, and May now 1 1/4 higher. On the wheat trade, Chicago March wheat, we currently have that trading 3 higher at 452 even per bushel. July 2 1/4 higher. And in the Kansas City market, we have the March contract there trading 4 3/4 higher, now 5 higher per bushel at 465.5. Just as we pulled it up on the screen, it made a new high for the day. The July contract, a nickel higher at 489.5, so that's 8.5 cents off its earlier low of the day. Tim, what do you think about this wheat trade here, the way it's performing today? It looked pretty weak early on, and with all that rain heading into the southern plains, a lot of folks thought that maybe it'd have a tough time. It's looking fairly strong, even with the U.S. dollar going higher.
Yeah, I mean, with the USDA adjustments last week, Kazakhstan's production numbers getting adjusted lower. I think that coupled with the technical developments in the market, I mean, we've taken out some pretty significant price levels, and I mean, there was a hefty short position that's been in the market for quite some time. So I think those that are holding those short positions, I think we're going to see some of those positions given up, and so I'm expecting for wheat to remain pretty strong here as we're going to kind of test the metal of these long-term shorts that have been in the market.
Okay, I want to take a quick peek here as well at our cotton market, because it has had quite a rally here the last couple of weeks. And right now we have March cotton up 61 points. Look at July, 92 higher at 78.86 cents per pound. Tim, we'll bring you back here in just a moment, and we'll talk a little about this cattle and hog market activity that we're seeing today on a Monday. Our guest, Tim Evans, will have more right after this. In Chicago. And Tim, you know, when we got the export inspections report out about an hour late this morning, they came out about the same time that we got our new box beef cutout values, and they were higher this morning. They were down on Friday, but today the choice cuts up 51 cents, and now you have selects gaining $1.39 this morning on the midday update. That spread getting really narrow now, only about $1 and a dime between choice and select cuts. Did it have any impact on the futures? Let's take a look. On the live cattle board, as we pull up the prices here, we currently have April now down 25 cents at 112.90 per hundredweight, so it's firmed up just a little bit off our earlier lows. We are currently off of our high by about 45 cents. June is now down 38 at 103.90 per hundredweight. Now on the feeder cattle side, we have the March now trading 4 cents higher at 122.12 per hundred. The April down 8 8 cents at 122.37, and the May down 35. So the nearbys trading a lot more firmly than the far out deferred months in the feeder cattle trade here. What are your thoughts on the way this cattle market is acting? Because technically it did not have a good finish to the week last week at all, Tim.
No, absolutely right. And I think the technicals are really going to dominate the market, and it's going to really require a kind of a fundamental shift in order to, kind of beat these bears back a little bit. We talked a few weeks ago about that well-defined trading channel that the market had been respecting effectively from October through the highs that we achieved in January. And we have worked through that trading formation on some pretty heavy volume. So we're going to need, in order to get back up and kind of neutralize this technical setup, it's going to require some pretty aggressive buying.
Okay, so now, given the time of year that we are currently in, I guess looking forward, the first holiday you're looking at is probably going to be maybe Easter, and typically that means a lot of ham demand, at least from what I can tell.
Yeah, well, I mean, that's what the bulls are hoping on, and I think ultimately that's what the market's going to want to see, and not speculation or really looking at the seasonals of the market, but actually seeing demand numbers come in where the market is expecting a new trend to develop to offset the current weak situation that we have in the cattle market.
So let's take a look at the lean hog trade then, and on the lean hog futures right now, right there in Chicago, we currently have February 33 higher, but boy, they are really pounding that April contract today after setting a high early of 71.78. We're now at 70.05. We're $1.70 or $1.75 off of our earlier high. We're now down $1.03 from our close on Friday. The May contract down 52 at 74.88. Now that market had a very tiny inside trading day Friday, but it did close higher. Technically speaking, does that mean that there could be more to the downside in the hog market here, in your opinion?
Yeah, I do. I mean, actually, based on the big outside reversal day we had that preceded that, typically if the market is going to kind of overshoot or kind of overdo itself to the downside, you would typically have a more aggressive snapback the following day. So, I mean, that inside day following that outside day reversal we had, to me is actually a bullish or a bearish continuation pattern, and that's what I'm expecting to see here, tomorrow, Wednesday, Thursday.
All right, thanks, Tim. I appreciate that. That'll be interesting to see after posting several new highs all the way since last June, I believe. So thanks a bunch for the input, Tim. I appreciate it very much.
Have a good day, Marlin.
Tim Evans of Longleaf Trading right there in Chicago. Hogs in a low